What's going on, everybody? Today we're going to be talking about this simple trick that can help you profit from scalping on the 1-minute chart. What are we talking about? A directional bias. Why do we want to have a directional bias? Well, to increase the probability that price will change direction. It's also more likely to reach your target. How do we know this? If we look to the left of the chart, we can see how prices reacted before, so we know this works. It doesn't mean that it's going to work all the time, but you're trying to put the odds in your favor. Without doing this, the chances of you being successful are less likely. So anything that you can do to help improve your odds is going to improve your chances of being a successful trader. Now, when we're looking at this, I'm using October 4th as an example. We can find many examples on here, but this is the one that I'm using. You can see how the candle closed. Now, if we went to the left of the chart, you can see that there was an area that it was reacting to. It didn't close in the body of the candle, closed below it. It was testing the area, closed below it. At that point, my directional bias is bearish, and I'd be targeting the low here. I aim for the body lows. I don't aim for the wicks. Other people may do differently, but that would be my target. And at that point, my entry for the following day, which is 5 p.m. Eastern Standard Time when the new day starts, and I'd be targeting the low. So everything that I'm looking for on the 1-minute time frame, you could be looking on the 3-minute, the 5-minute, whatever you choose, but I'm aiming for a bearish direction all the way. Those are the only trades that I'm looking for. Now, if we go down to the 1 minute, so now we're going to fly through this. There we go. I haven't tried the bar replay since they've changed it around. So what we're doing here is we've decided that we're only looking for bearish trades, and this is how we're doing it. So we're doing the same thing that we did on the daily. To choose the direction, we're looking for areas where price is being tested, but choosing not to close above it. And when we see that, we consider that as a possible entry pattern, and then we target the low. So you can see here, price came up and it closed below it. It wouldn't push above it. It doesn't mean that it wouldn't have kept going, but this was a clue that price could change direction. We already have in our head that we're looking for trades in a bearish direction. So this is a good signal for us. Some people might want more of a confirmation and they may wait for more candles, and you can do that. There's nothing wrong with that, but this is just an aggressive entry for this example, and this trade worked out. You could see that risk reward was 2.89. You could see stop loss was extremely tight. So that's why choosing a broker with a very small spread to no spread at all is going to be essential for this. Otherwise, you'll just have to make your stop loss a little wider. And as we go through this, I want you to see how many trading opportunities there actually were. And there were more throughout this, but I'm just showing you what the potential is for you as we go through this. You can see how it happens over and over again. So some are bigger than others. And again, here we go. Price comes up into it, closes below it. At that point, I consider that an entry. Stop loss just above, target the low. This was a very quick trade. It was only a few minutes. So this is going to take practice. You're going to have to test all different kinds of things when doing this, but you're going to put things on your side. You're going to have wins and losses too. So while you just see the wins that I'm showing you, which is fine, but there's losses. You're going to suffer losses in between this as well. And this is why the directional bias is going to help you. And the goal is to be more profitable in the end than with your overall trades. And this will be a good way to form your decisions on which way you want to trade. This can work on other time frames as well. So you don't need to just use the daily for this. You can go through, you can use the 4 hour, you could use the 1 hour, whatever you want to use. The daily just allows you to target a longer movement. If you were just looking at the 1 hour, obviously your target is going to be less. But when you use the daily, it just gives you a bigger run. But you could see the potential on this. This happens over and over again. You're just looking for opportunities to come and present themselves. When they do, you take them. You can be as strict with your entry as possible. Like with this here, you can see how the decision was formed on this one. You could see that the area was marked off here. Price came into it, did not close into the candle. And at that point, you could have gotten in. Some people might have waited for an engulfing pattern to get in on this. But if you would have taken the aggressive approach, you would have gotten in there. Stop loss just above. Target the low. And that's what you would have done for that. And you just repeat this over and over again. Of course, you're not going to catch every trade because nobody's going to be glued to the screen all the time. But if you work at this, picking your specific time, like if you only trade New York session, test this out on the New York session. Find out what the best time and what are the best pairs that work for you. And let me know if this works, if this helps you out. But you could see all the opportunities that you had. There's ways to refine this. But you're just trying to put things on your side as much as you can. And I try to make things as simple as possible for everybody when they're on this channel. And if there's a way that you can find that will improve this for you, make things easier, you go ahead. But it's the same thing over and over again. You can see here where I had that marked off. You can see that it was an area, like you mark off tons of areas. You can mark off, you could see you could have had a line running across here, but I wouldn't have taken the entry because you could see the body closed into it. So some people might have considered this a possibility, but I wouldn't have taken it because this particular type of entry pattern requires the body of the candle to close below the previous structure. And when I see that, I consider that a possible entry. You're going to win and you're going to lose a bunch as well. If you're also playing in the direction of the overall trend, the goal is to be more profitable than you're not. And we can see how price finally came up to that area. Tested it. It didn't close above the line. Closed below. As soon as the candle closed, we entered the trade. And you target the low. Now, this one played out perfectly fine. And they're going to be short trades for these ones. You can see with this one, it was only a 25-minute trade. And the risk to reward was 8.56. Not bad. So when you get some good runs like that, it will make up for your losses. And again, it happens over and over again. Comes up, tests the area, closes below it, you enter in, target the low. And again, what did we see here? What did we see here? What we did here is this was an engulfing pattern for this one. You don't need to take a trade on an engulfing pattern, but that's one of the trades you could have taken. And the reason that you would have done that on this one is because we've already had a good signal off of this. We wanted to see a stronger confirmation off this since it was coming back into the area a second time, and the engulfing pattern would have been the pattern to choose. But right now, I've lost count how many trading opportunities have come through. And this is just on the one pair. And that's why I don't think you really need to be watching more than one pair when you're first starting out, because you're also going to get a string of losses. If you take on too many pairs and for some reason your analysis is incorrect and every one of those pairs goes against you for the next week or two, or even a couple of days, you may get hit with enough losses where you just don't want to trade. You may close your laptop or turn your computer off and not look at it again for another couple months. You may be so discouraged and you thought you had this figured out, and now you don't even want to trade. So you can see that like this repeats itself over and over again, and you can see this on all time frames. It's not just this one. So we made our analysis on the daily using the same type of examples, and we're taking entry on the 1 minute doing the same thing. So here we go. Price came in and tested the area, didn't close into it, and you enter in on the trade at the close of the candle, stop loss just above, target the low, and you can see the risk reward here was 9.7. Now you can see this was only a 2 pip stop loss. You could have made this bigger and it still would have been a good risk to reward. Another trading opportunity, price comes down. And remember, all our trades are only bearish. We're not taking any bullish trades because we've decided that the market is only going down. So we're more likely to have more winning trades than losers if we aim in a bearish direction, as long as the analysis is correct. If we're wrong, then this may not work out as well, and we may suffer a small drawdown because we'll take it wins and losses, but we'll have maybe more losses than wins this time. But this is how you can have a strategic advantage. And we just have more and more trades. You can see how this one played out. Here we go. Comes into the area, doesn't close into it, tests the area, closes below it. We enter in on the trade, target the low. This was a risk to reward to 7.8. And what was this? This was an 18-minute trade. Here we go, another trade. This one went quick. Came up, tested the area, didn't close above it. Enter in on the trade. Risk to reward was 11.13, and it was a 20-minute trade. And this happens over and over again. Now there's a lot of things that you can do to try to improve this, and that's going to be up to you to try to refine it. But I hope this helps and gives you some insight on how you can improve your trading. And you can see for this one too, my target for this one was the low. Now this is what, if you remember on the daily, we had the opening of the new day on the candle, so the close of the previous day was there, and then this would have been the low of the daily where I was talking about previous structure there that I was targeting. So that's what I was aiming for as I almost reached the target. So that's it for this. And if you have any questions about this, I'd be happy to answer them. Test this out and let me know what you think. And I'd love to hear your feedback on this. And until next time, bye for now.